Alright, before we go any further, real quick, if you enjoy thoughtful, level-headed conversations about crypto and markets without hype or fear, go ahead and hit the like button and subscribe right now. It helps the channel grow and it tells the algorithm this kind of content is worth sharing. Now let's get into it. My crystal ball says XRP will hit this price by December 31st. And before you take that literally, let's be very clear about what that actually means. This is not a prediction, not financial advice, and not a promise. Think of this as a framework, a probability-based way of thinking about markets, similar to how analysts like Tom Lee approach macro trends rather than short-term guessing. The goal here is understanding, not hype. Tom Lee is known for focusing on big picture signals, liquidity, market cycles, sentiment shifts, and structural changes. He doesn't stare at 5-minute charts all day. He looks at where we are in the broader cycle and asks a simple question: what conditions need to be true for prices to move meaningfully? That's the mindset we're using here. So let's slow down and build this from the ground up. Markets don't move because someone says a number out loud. They move when conditions align. Liquidity expands, risk appetite changes, narratives shift, and positioning adjusts. When those things happen together, price moves can look sudden, even though the setup took months or years. For XRP, the conversation has always been different compared to most crypto assets. It's not just about speculation, it's about payments, regulation, and integration with existing financial systems. That alone puts XRP on a different timeline than hype-driven projects. When analysts think about end-of-year price scenarios, they don't ask, what do I hope happens? They ask, what would need to happen for this to be realistic? That's a crucial distinction. One major factor is overall market direction. XRP does not move in isolation. If broader risk markets are tightening, liquidity is shrinking, and investors are defensive, upside is limited across the board. On the other hand, if liquidity improves, risk tolerance increases, and capital rotates back into digital assets, the entire crypto market benefits. Another factor is narrative clarity. Markets hate uncertainty more than bad news. When uncertainty begins to fade, whether through clearer regulation, clearer use cases, or clearer positioning, assets can reprice quickly, not because something magical happened overnight, but because risk perception changed. XRP has spent years under a cloud of uncertainty. That doesn't mean it was inactive, it means it was being evaluated, tested, and debated in public view. From a market psychology standpoint, that creates a very different setup compared to assets that have never been stress tested. Tom Lee often talks about sentiment being a contrarian indicator. When everyone is optimistic, upside is limited. When skepticism is widespread, but conditions quietly improve, upside potential increases. XRP has lived in that skeptical zone for a long time. Another key element is positioning. Markets move most aggressively when people are underexposed. If too many participants are already positioned for upside, there's no fuel left. If positioning is light and sentiment is cautious, it doesn't take much to trigger a move. That doesn't mean price must move. It means the environment allows for it. Now let's talk about time. End-of-year targets are psychological more than mathematical. Humans think in calendar blocks. Funds rebalance. Narratives reset. Performance gets evaluated. December 31st isn't magical, but it's a reference point that shapes behavior. From a cycle perspective, crypto has historically moved in waves tied loosely to liquidity conditions and risk cycles. Those cycles don't repeat perfectly, but they rhyme. Analysts look for similarities, not exact matches. XRP's utility narrative also matters here, as conversations around faster payments, settlement efficiency, and cross-border transactions continue. Assets tied to real infrastructure tend to re-enter the discussion. That doesn't guarantee adoption at scale, but it keeps relevance alive. Another important point, price targets are ranges, not single numbers. Serious analysts don't say, this will hit exactly this price. They talk in scenarios: conservative case, base case, optimistic case. Each one depends on assumptions. If liquidity improves modestly, sentiment stabilizes, and no major negative shocks occur, XRP could reasonably reprice to levels that reflect reduced uncertainty rather than explosive growth. If conditions are stronger, broader crypto strength, improved macro environment, and increased confidence, those ranges expand. But it's critical to understand this. None of that requires belief. It requires probability assessment. Markets don't care what anyone believes. They respond to flows. That's why emotional attachment is dangerous. Being curious is healthy. Being convinced is risky. Another thing Tom Lee emphasizes is patience. Being early feels the same as being wrong until it doesn't. That's one of the hardest psychological challenges in investing. People don't quit because they were wrong. They quit because they were early and got tired. XRP holders know that feeling well, but endurance alone isn't enough. Understanding why you're patient matters. Blind patience is just delayed reaction. Informed patience is a strategy. This is also where expectations need to be realistic. Even strong moves don't happen in straight lines. Volatility doesn't disappear in bullish environments. It often increases. Pullbacks don't invalidate trends. They test conviction. Anyone expecting a smooth ride misunderstands markets. From a policy standpoint, it's also important to say this clearly. No one should make financial decisions based on a video, a headline, or a personality. Use this information as one input among many. Do your own research. Understand your own risk tolerance. Crypto is not guaranteed. XRP is not guaranteed. No asset is... What we're really talking about here is preparedness. If conditions align and price moves, you won't be shocked. If nothing dramatic happens, you won't be disappointed. That emotional neutrality is powerful. That's how professionals think, not because they're smarter, but because they're disciplined. End-of-year narratives will come and go. Some will age well, others won't. The only thing you control is how you react to them. If XRP does experience a meaningful repricing, it won't be because a crystal ball was right. It will be because multiple forces aligned at the same time. And if it doesn't, the long-term story doesn't suddenly disappear. Markets are not verdicts, they're processes, and processes take time. If you stay grounded, informed, and patient, you give yourself the best possible chance to navigate whatever comes next, whether that's excitement, boredom, or something in between. That's the real edge. And when you think about it this way, the idea of a price by December 31st becomes less about a number and more about a checkpoint, a snapshot in time where the market pauses, looks back at the year, and reassesses what it believes. Belief drives behavior, and behavior drives flows. That's the chain reaction most people miss. One thing Tom Lee has said repeatedly over the years is that markets move ahead of fundamentals, not after them. By the time fundamentals are obvious to everyone, price has usually already adjusted. That doesn't mean fundamentals don't matter. It means they matter earlier than people expect. With XRP, a lot of the heavy lifting has happened off chart. Legal discussions, regulatory dialogue, infrastructure testing, and institutional evaluation don't show up as green candles. They show up as time. Long stretches of time where price feels frustratingly stagnant, but stagnation is not the same as failure. In many cases, it's the cost of surviving uncertainty. Another factor that rarely gets enough attention is capital rotation. Money doesn't just enter or leave markets, it rotates within them. There are periods when speculative assets dominate attention, and there are periods when utility-driven assets quietly regain relevance. These rotations don't announce themselves loudly, they show up gradually then suddenly. XRP's positioning means it tends to be discussed later in cycles, not earlier. That's uncomfortable for people chasing fast moves, but it's consistent with how infrastructure-oriented assets behave. There's also the psychological reset that happens toward the end of the year. Funds rebalance. Risk managers reassess exposure. Narratives get cleaned up. What felt messy in the middle of the year often looks clearer in hindsight. That reset alone can change how assets are viewed, even if nothing dramatic happens on a single day. Another important piece is expectation management. The most dangerous assumption is that a positive scenario must happen quickly or it's invalid.